And before I start, many thanks to Brian for giving us such a wonderful start to the morning. And Brian, while you spoke about a broad range of topics within our industry, we are going to use that and pivot into the business part of the conference. And really speak to leaders to understand from a business transformation perspective, how are they using the emerging tech to make life and experiences better for the end consumer. Before we start and jump in, I would like to request, and we also have Sanat Rao. Is it possible for me to see Sanat? Is he joining us through Zoom? Okay. Hi, Sanat. So I would like to request all the panelists to possibly introduce yourselves in your own words. Tell us who you are, what are you busy with, and possibly also tell us what are you passionate about. One aspect that you're thinking about, a problem that you're solving, a concept that you're pondering over, a future element that you're intrigued with. Anything that comes to mind. Alice, starting with you.
Okay, good morning. I'm Alice. I'm a new banker, joined the Marshall Bank as the CIO for a year. So my background is come from the Alipay and Google. So my interest and passion is how to do the digital transformation to help the consumer or the corporate user can really get a benefit from technology.
Hello, everyone. I'm Yann Bechet, so I'm head of commercial banking for Dubai. So I manage the relationship team of Dubai, and I used to be chief operating officer for commercial banking and also managing the compliance. So my passion is trying to see how the compliance, the CEO side, and the technology can, positively impact clients and their experience with banks.
Thanks, Yann.
Can you hear me? Oh, no. Okay. Hi, good morning. My name is Stefan Kimmel. I'm the Chief Operating Officer of the Commercial Bank of Dubai. Like Alice, I've only joined banking about a year and a half ago. Prior to that, I was in consulting for about 22 years. I was with BCG, Oliver Wyman, and then in the IT service industry with IBM for 5 years in the region. And I'm looking over operations and IT predominantly. Passion would be, of course, in this function to provide customer excellence and a brilliant customer experience to our customers using all the means of technology in order to do so jointly, of course, with our fantastic teams in operations.
Morning, Valérie Boulois. No. So I'm in charge of the channels and partner management. It's a software company in the client lifecycle management. And we are, of course, trying to support the bankers to implement the full onboarding KYC processes. And my passion is to make business development, of course, and to, of course, support the software banking for 30 years now.
And thank you, Valerie, and thank you all. I'll start with you, Alice. So emerging tech is almost like a shifting goal with everything, new things coming out. So how, in your opinion, is it impacting the business transformations that are happening? Because once you invest, you're tied to it for a little bit time. And also, Alice, tell us, what's your opinion of platform banking? Is it something that we can think about? Is it something that we can truly imbibe at this stage?
Yeah, I think that since the COVID, everything moved to the cloud, have the more digitalization to integrate with the omni-channels. So our client, customer, actually expect they have the faceless company and help. So I believe most of the banks are quite busy. Last year, 2020, more focused on the digital inside and digital outside. What is that? It's more like you use the AI data to improve the efficiency and productivity for your operation, to reduce the operation cost. The second, digital outside means you provide offering, a new offering to your customer through your super app or your website to provide a seamless service. So that is 2020. All the bank really focus on the technology to help the digital inside and digital outside. But look forward, This year, your customer already know how to use the digital tools. So how you can provide more service to them. So that is, I call it the digital inside out. You provide the bank, for example, payment code system, modular technology to your brand partner, like e-commerce, like a telecom provider. They can serve their customers through your modularized technology to provide better end-to-end service. So that's the digital inside out. Another side is that we call the digital outside in, is we call the platform banking. As the bank, as the service provider, we also integrate more and more different service from market player to use the one bank account, because that can benefit our customer to get their want quickly. So platform banking actually is very natural things because you want to service your customer more easily, more end-to-end. So you will try to integrate with the different service provider. So that's why we talk about open banking. Through open banking, through API, through the microservice, you can more easily to integrate with the different service into your portal and super app. So I think that is the trend because your customer, your client actually need that.
Excellent. And Alice, we have a panel on open banking later in the day. So I think I'm really looking forward to that as how they deep dive. Jan, on the compliance and regulatory front, I think the shared risk management is becoming the norm. Banks are coming together to see how they can solve it collaboratively. I think you have led this, you're at the forefront of these journeys, and I'm particularly aware about your work with eKYC, blockchain, with Dubai Smart Government. The question is collaboration the only way forward?
So I think when I look at banking and collaboration, I think there's no question whether banks need to collaborate with fintech. They need to. Long are the days where banks, were thinking that they could do everything on their own with their own IT teams. Now collaboration is the key. But it doesn't stop here. So collaboration is also with the regulator and with other banks, because we have common sets of regulations and practices that we have to apply. And so the work we've done with the DED on eKYC, on blockchain, is trying to streamline the journey. And you cannot just streamline the journey for your own bank and try to fulfill it yourself. You also have to get access to the data, a data that is accepted by everyone, a data that is validated already. And there's no better place to do that than, taking the data out from the government itself, from the trade license registrars, and trying to embed that in your system, because the data is validated. So the real impact is the customer impact, where banks just pull the data directly from governments into their system, so the KYC is seamless. We don't have to ask customers for data. We just serve ourselves there. And we also leverage it ourselves. As banks, we have KYC practices. Why not, in some cases, make sure that actually you have common access and we share some information.
And possibly with the growing time, monetize data. As we reduce, as banks, our cost to do KYC, and then help each other grow revenues around that. Excellent. Thank you, Jan. We will open the floor for some questions as we go about. So please, if you have a few thoughts in mind, feel free to jot them down. Stefan, we have seen a trend in the region in the last 5-6 years where mobile-only digital windows have come about. And they have been created by traditional banks. You have examples of CBD Now, Mashreq Neo, Emirates NBD Live, and so many others. But very recently, and at the advent of pandemic, we heard about some really pure digital banks being announced. I would call them born digital rather than digital migrants. Do you see this as a threat or an opportunity?
Again, no. Okay. So this way, I'll probably take a controversial stance and say I'm not overly concerned about it. There's an opportunity in this space, but I'm not hugely concerned about this trend. And the reason is simple. When banks launch digital-only windows, and of course, fintechs have similar standpoints, is you do it for two reasons. Either strategically to serve a new market segment that you don't want to serve under your traditional main brand, so enter a new segment under different name, or to establish an operation that's leaner and meaner and digital and lower cost than what you can do with your main operation. And that applies to larger banks, obviously a lot more than to smaller banks. And I see in our market here, given the size of the market, given the regulation, the legal framework, customer behavior, and several other parameters, I don't see it as a huge threat. But for the simple reason, in order to target a new market segment, first of all, you need, of many other things, you need scale, right? You need a certain size of customers, and you need those customers to actually transact with you, transfer money to you, and fund their accounts with you. Now, even beyond this market, if I look out globally, a lot of the fintechs generate, or new windows generate a lot of hype, originally attract customers, but very few of them actually succeed in making money. And it's often the reason is because people don't use them as their main banks, they don't transact enough with them, and they don't fund those accounts. And that applies even more so, it is an even bigger challenge in our market because it's so much smaller. So that to me is one major challenge, really attracting the right customers at the right scale to justify any investment. The second thing is then in any of the fintechs start out lean and mean and sexy, as they should, but then very quickly again get hit by regulation, by consumer protection, by the legal framework in this country. There's still a challenge to get a digital signature accepted. Yes, by the regulator, not necessarily at a court of law when you actually try to collect money that somebody owes you. So there's still a lot of challenges, and bit by bit, either these challenges or windows have to then limit the business they do in order to stay digital, or invest a lot more in their costs and operations. Then they come closer and closer to the original banks. At the same time, the incumbent banks, of course, do the same from the other side. Could be trying to become, before investing in additional channels, they all look nice as well. And now the end-to-end operations become more digital. So in the end, you almost meet in the middle, of course, from different starting points and a different speed. And of course, there's still limitations to speed and risk awareness and other things that are coming from traditional banks. But I think that the difference, the challenge, the challengers have from day one to be a viable business is big in this market. At the same time, the migration from both ends is ongoing. And therefore, for instance, the strategy we've actually chosen is to basically just, and we're not as big as HSBC, so we have a slightly different starting point. We just try to be as lean and mean as possible in our main operation. We now have a cost-income ratio from under 27%, and try to digitize everything, make lean as mean as possible, and go head-to-head on that basis.
Correct. And Stefan, while you were talking, it occurred to me that also the opportunity lies in someone else doing it with the regulator, or something that you have struggled as a bank for long, the digital signatures and the cryptos and so forth.
That's where the collaboration among banks is key. And I think it's not so much a regulatory problem. It's an application of the law. The regulation framework, the work that is being done by the central bank and so on goes in that direction. We're still in the lag phase where the regulation is there, but then the application of that regulation in front of a court is always lagging by definition. And we're still in that phase where I think this needs to be solved. I've got absolute confidence that this will be sorted very shortly because the whole industry is pushing for it. And I think banks and fintechs have demonstrated as well that with the right set of governance principle and framework, things are safe and secure. We don't have, we talk about cyber as a key risk, and as was mentioned in the opening note, the cyber risk we see is still mainly person-related rather than system cyber risks that we face. So I think that's the state we are in.
And I think Brian also mentioned about the plans, right, for DFSA, ADGM, central bank coming together. That was the fantastic news. And then your plans for Q3, Q4. So this is an emergence of a regulator keeping pace with the business changing practices. This is fantastic. Valerie, I have a question for you. So the textbook statement, real transformations and end-to-end, the seamless interactions for customer experience, and yet we see a good glass getting launched with an army of people at the back stamping the paper. So question to you is that, in your opinion, what are the critical aspects for transformation and what we should really not ignore?
Certainly, what we discover is that in the past, there were already initiatives about innovation, caring about some new tech. But now that we have been forced all to transform finally these financial services rapidly through the pandemic, we discovered that digital doesn't mean only bringing some nice lipstick of the digital, but to have this end-to-end, front, middle, and back in this organization. And certainly, due to the remote, give access to the employee of the bank, and especially the compliance team, to get access easily to all the system and to automate it, but keep the collaboration through the new digital processes and really care about the digitalization end-to-end. And another aspect we discovered totally is connect the disconnect, as we say, because unfortunately, some system, we say there is a little the spaghetti systems in this organization, and they need to bring more and more layer to collaborate, to make the lasagna level, where we have the data organized, the collaboration organization, fully digital for all the stakeholders, internal, external.
Excellent. Sanat, we really miss you. You know, you should have been on the stage if the London-Dubai corridor would have allowed. But my next question is to you, Sanat. So digital can be many things to many people, right? Sometimes the magic is in the interpretation. So in your view, what is the gap, right? What is the gap that you see where you are? And what should we focus on filling?
Good morning, everyone. Very sorry can't be there. I'm here speaking to you from London. So Zubair, I think the gap has sort of changed in complexion over the last several years. If you go back to over 5 years ago, I think to a lot of institutions, digital and electronic channels and the customer touch points. That obviously is still relevant, there's no doubt about that. But I think it's changed in complexion in that the gap today is about the ability of the organization to instill digital across the enterprise and at scale. Now, a lot of research has been done in this area, and I think less than 10% of the institutions have really been able to successfully deploy digital at scale across the enterprise. So I think the gap really is there. Now, as we know, a multitude of factors that come into play here. It's not just technology. Starting with, I think, how sharp and clear is the bank's vision for digital itself. How many customer journeys are, truly digital. How automated are these processes? And indeed, what's the culture of the organization to embrace the new ways of, working and adapting to the emerging technology. So I think there are a lot of factors that have come into play, which has in some ways, I think, widened the gap. The second point, I think, is, like Valerie just mentioned, the challenge of trying to create a fully digital enterprise front to back. I think this is where different banks have had different experiences, and I think while in silos the experience has been good, for the bank to get the full benefit of fully digital transformation, it's necessary to do it front to back. And certainly, we've seen in the last few years a lot of institutions focus at the front end, and that's good because there's certainly a lot of exciting developments happening there. But I think back-end transformation, there's still a fair amount left to be done, and therefore the results are not yet fully optimal. The last point I'll make is that, competition is coming in from all sides. And certainly, whether it's the fintechs, whether it's the non-bank players, whether it's the big techs, many of them are redefining the expectations that you and I as individuals are going to have. So I think the drive towards digital transformation will be really focused on continuous innovation, it will be focused on end-to-end transformation back to front. And last but not least, a focus on really tangible results, which you and I as customers can actually touch and feel. So I think the gap across a lot of these different aspects even though the banks have seen, I think, good results in specific aspects of that transformation.
Correct, correct. And while we fill the gaps, Sanat, we then do it fast, right? So the next challenge is to how to embrace the agility around this. All right, I'll move on to the next round where I was personally intrigued that what happens now? Pandemic has happened. We have learned our lessons. We are continuously learning from a human perspective how to react to the situation. But what happens to branches? And I'm asking this cheekily because I know Mashrik is here on the podium announcing recently of closing so many branches, Ellis. So the question to the forum, and anybody can start, is to what the branch looks like in the future. Would we have them? Is it still culture building like it has been in the Middle East for so many years? And I used to fight this concept that branches will always remain. But I'm in doubt. What's your views?
I can take a start. So yeah, look, I mean, the reduction of branches and branch footprints is obviously not since the pandemic. That's been going on for many years, and around the world, everywhere we see a reduction of branches. So that's a given. I think, and it will continue to be the case. Will they fully disappear? I don't think so. There's still too many types of customers and types of transactions, and a matter of trust building as an aspect of where certain things will continue to be done in branches. And there's an expectation and a need for that. I think it won't be the basic transactions. You don't go there anymore to just transfer money or ask for a loan. That can all be done digitally. The more high-end in the corporate space, more advisory type services and consulting type services could, in theory, of course, be done on Zoom and Teams these days, and we all do it. But I think there's still a need and a purpose of doing that face-to-face and in person. And definitely in this geography, there's hands down a clear expectation, need from our customers to do that. They want to come to a branch. They want to sit with their advisor or business partner and do that. So from my point of view, we'll continue to see a reduction. They will change in purpose, but for the foreseeable near future, they still have a purpose in my mind.
Yes, sorry. Also, we need to bear in mind that we have a customer base, and not all the customer base is digital savvy. So that's the first thing to bear in mind. So for some time, there will still need to be face-to-face interaction to serve the full customer population we have. The second aspect relates to the medium that are used to transact. Not everything is still digital. If you take the region as an example, checks are still a storage value sort of instrument that is important and hasn't been digitized. So for as long as you have those mediums of payments live and used as it is now, I think the question of having branches is irrelevant. Yes, you need branches for now. The interesting point is, what happens to the 100% digital banks in terms of what they can serve, in terms of what customers need to do. So they took a stance and decided to go not for the full scale of products and services because they cannot offer those services. So I think what we will see is a redefinition of the branch, a redefinition of what client wants and can do in the branch. But face-to-face hasn't disappeared. And for as long as face-to-face hasn't disappeared in the advisory space in particular, I think branches would still remain.
So Valerie, for yourself, Sanat and Ellis, then I think pivot and answer it in this way, that what would it look like? So what Stefan and Jan are mentioning, that there will be a nice hybrid that would remain, but I'm curious as to what would it look like?
Sanat? Sure. I think there's no one-size-fits-all approach. And I think certainly in certain markets in the world, branches are going to still remain fairly relevant. I think it's going to be a combination of different factors. There's certainly going to be a much stronger element of advisory element in branches rather than pure transactions, because I think as the last 1 year has shown, the regular day-to-day transactions can be very easily done elsewhere outside of the branches. So I think that will certainly reduce. But the advisory and the wealth-related aspect will certainly increase. The second element, I think, is that we have to look at the relevance of branches in the context of the progress around the other channels. I don't think we can afford to talk about branches disappearing without necessarily ensuring that all the other channels are up and running and serving the expectations of an increasingly demanding client base. So I think we have to look at both of these in conjunction. And as it was often said, there are two questions that have been endlessly debated in the last 12 months. One is, will branches disappear? And the second is, will cash disappear? And I think the answer to both questions is that we know which way the trend is going, but neither will totally disappear. They both remain. The usage of branches and the usage of cash will both reduce substantially, but there will certainly be a role to play.
Interesting. Valerie and then Alice. Go ahead.
Probably what we see is that we will have this hybrid model for sure, but there must be a continuity between the digi-physical or the physi-digital, so there must be any break between these two modes, and that's why this hybrid needs to live very well. That's one element we see, and definitively the second aspect is personalization, and iTouch, continue to have this iTouch personalized relationship, and bring it to and using maybe tools that will, like the AI and so on, to accelerate or support advisory, as he said, but keeping this human touch, because I think this is also part of the bank services that we expect as a client.
Correct. Alice, what's your view?
Yeah, well, that's a good question. But before we talk about a branch, I really glad today we are talking about a banking technology, not a bank technology. If we focus on the bank technology, of course, we need a branch, because that's the process we need to follow, and people expect a face-to-face. But if we talk about a banking technology, that means we provide a different service as currently as is. So for the banking service, new banking service, people not expect you have to face-to-face touch. So we always use a digital transformation to put the two words as a one sentence. Actually, for me, it's different. Digitalization is help you to improve the process, to improve your BAU. That is the banking technology. Transformation means you use the new technology to provide a new service to your customer. It's a different things. So why we need a branch is very depend on what the new service you provide to your client, for what purpose. But for me, my personal, when I stay in Asia, I have the 5 years not been to branch. I don't bring my wallet for 8 years. That's my personal experience. So it will depend on why you need to go there and what is the purpose, what is the standard protocol you have to follow up. But if we focus on the further, we provide the banking service to your client. Most of the service you don't need to have the face-to-face touch, like a Netflix, Amazon, Google service, Facebook. They don't have the branch, but we still use their service every day, and we trust them. So that's where it totally depends on what service we want to provide to your client.
Excellent. And I think it's, and Jan, it's your area, in my view, requires to help, right? Because if banks can extend those services out through the ecosystem, right? Why do I need to go to a bank if I'm buying a car? No bank at all, right? I just buy the car.
But that's also what the pandemic brought as a challenge. But actually, we discovered through the pandemic that we could do more with our clients. Face-to-face is not required, and actually, there's added value in some cases. So I'll take an example. The other day, we had a call with a client, and everything was on Zoom. The client was using Zoom. We were using Zoom. The client was located in different spaces, so the whole client setup having representation of all the countries. We also could bring our Asia Pacific team into the discussion at a much higher level. I think those things, this is corporate banking. in the retail space, the same thing can happen in the advisory space. So you can bring a different type of value on this remote face-to-face interaction with clients. And I think that there are some learnings here. We don't know as we stand how this will pan out, what will stick and what will revert back to the old normal. But it's been certainly appreciated by clients that banks could still operate, and actually there was not so much disruption during pandemic. So the next question we have now is, where does it lead us to? What is the next step, and what is the preference of customers? Because we all here to talk about technology and so on, but I think the key is going back to the client and saying, what do you really want?
Correct. And I think I agree with Brian, also touched upon that. The demand is becoming more demanding. So demand is charting the way forward. I think we have 5 minutes. Can we take some questions? If you have any questions at this stage, please let yourself be known and someone will pass on the microphone. Right here in the center. Not set up for Q&A? Okay, then possibly then your question we can take while we're at coffee. So I'll possibly use the last 5 minutes for a question that I have. And Ellis, yourself or Stefan, who are in a way new to the industry. So while you're new, you're a student to a new subject, but also when you're new, you don't have a baggage that a seasoned banker would carry. So how do you see this? What would be your advice to the seasoned bankers out there? 2, 3 perspectives that we should think things differently.
Yeah, it's quite interesting for me to ask a banker. I feel the industry is very competitive because it's not just the pressure from the existing other bank. It's because the big pressure from the big giant like Amazon, like a Google, even like a Facebook. They try to provide a digital currency service. So it's really high pressure, very competitive industry. And what I learned in past year, how conventional bank can be transferred to be a digital banking. I think need to have 4 focus. The first, you have to digitalize your customer experience. Because of COVID, everybody go to the cloud. All service running on the cloud, or use the digital tool. So you have to digitize your customer experience. The second, how you to digitize your product and service to be connected and can be really easy to set up, have your customer need. And third, if you have the new super app or the platform banking service, you have to think about how you to digitize your operation. Because before we talk about operation, it's all running on branch, but now move to the cloud. So how to do the digital operation on the cloud through a different channel, that's the new challenge to the bank. The last focus is how you to digitize your organization, because you need more talent. They have a really good experience to know how to analyze the customer behavior, integrate a different market service into your platform banking, or provide your API to service the bank as a service models. So that's the 4 things as the conventional bank, how you to transfer to a pure digital banking, digitalize your customer experience, digitalize your product and service, digitalize your operation, and digitalize your organization.
And thank you. Stefan?
It's a very good question. And I think it's obviously not like people who come from a tech or non-banking background have the ultimate wisdom on earth and just bring that wisdom to the banks and teach them how it's done, right? I think we people with our background are typically brought in to ask different questions, to challenge the status quo, and just ask questions that somebody who's been growing up in banking for 20 years wouldn't necessarily ask. I think the long-term vision is probably the same. I mean, we all read the same news, the same consulting magazine.
Approach is different.
So everybody knows roughly where we want to head. I think mixing traditional bankers with non-bankers that bring a different approach probably accelerates that process because we would tend to ask questions that other people wouldn't ask, plus potentially bring the tools already in mind on how to get there faster, right? I mean, if my starting point is this is what I do today, what could I change? That's your starting point. If you come from a tech background, your starting point is the other end of the spectrum. Typically, because of regulation, because of customers, because of a lot of things, you can't just jump straight there in many cases. So you work together to find the middle ground. And I think that's the openness and mindset from both sides to ask questions, accept some things can't just be changed overnight, and work jointly together on what can be done, and as Jan was saying, what really serves the customer. What does the customer want? Yes, we can do everything digital, but does the customer really want it? Don't they just enjoy coming to a branch and talking to somebody? So bearing the end goal in mind, working together, keeping the customer in mind, I think that's the mix that needs to be established to come to the right conclusions in the right pace and with the right commercial underlying model.
Excellent. Thank you so much. We can carry on this conversation, but unfortunately, I'm getting the nod. So thank you all. I hope some of the conversations you can carry in the coffee area as well with the colleagues here. I thank you all for joining us today.